Welcome to InvestorWeb, your reliable guide to smart and informed investment choices. We're here to be your compass in the vast world of finance, offering accurate, timely, and useful information that can help enhance your financial literacy and decision-making skills. Whether you're a seasoned investor or a newcomer dipping your toes in the investment pool, InvestorWeb is dedicated to providing you with the knowledge you need. Our content ranges from basic financial concepts, like savings accounts and budgeting, to more complex topics like high-yield savings accounts and investment portfolios. We believe that with the right information, everyone can make sound financial decisions that lead to prosperity. So if you're curious about the world of finance and investments, you're in the right place. Stay tuned to InvestorWeb and make sure you subscribe for more insightful content on investments. Before we delve into high-yield savings accounts, let's first understand the basics of a savings account. So, what is a savings account? In essence, it's a place where you can store your money securely while earning a modest amount of interest over time. It's a cornerstone of personal finance, a tool designed to help you accumulate wealth gradually, safely, and with minimal risk. Now, let's break it down a bit further. When you deposit money into a savings account, you're essentially lending that money to the bank. In return, the bank pays you interest as a kind of rent for using your money. This interest is typically calculated as a percentage of your account balance and is paid out on a regular basis, often monthly or annually. But savings accounts aren't just about earning interest. They also offer a level of security that you won't find under your mattress or in a piggy bank. You see, savings accounts are insured by organizations like the Federal Deposit Insurance Corporation in the United States, meaning that even if the bank goes under, your money is still safe, up to certain limits. Another key feature of savings accounts is their liquidity. Unlike investments in stocks or bonds, which can take days or even weeks to convert back into cash, the money in your savings account is readily accessible. You can withdraw it at any time, although there may be some limitations on the number of transactions you can make each month. And finally, savings accounts are a great tool for budgeting and planning. By setting aside a portion of your income in a savings account, you can build up a financial cushion for unexpected expenses, save for future goals like a down payment on a house, or simply accumulate wealth over time. So to summarize, a savings account is a secure place to store your money, earn some interest, and access your funds when you need them. It's a fundamental tool for managing your finances and building wealth. Now that we've covered the basics of a savings account, we can move on to what a high-yield savings account is. A high-yield savings account is quite similar to a regular savings account with one major difference. But what is this difference? Well, let's delve into it. A high-yield savings account, often abbreviated as high-SA, is a type of savings account that earns significantly higher interest rates compared to a standard savings account. Now, you might wonder why it offers such a higher interest rate. The answer lies in how banks and financial institutions operate. These institutions use the money you deposit to lend to others, and in return, they pay you interest. With high-yield savings accounts, they are typically offered by online banks that have lower overhead costs, allowing them to pay higher interest rates to their customers. Now, why should you consider a high-yield savings account? The primary benefit is the ability to grow your savings faster. Imagine planting a seed and watching it grow into a strong, towering tree. That's exactly how your money grows in a high-yield savings account. The higher interest rates mean your money grows faster, giving you more return on every dollar you save. Furthermore, high-yield savings accounts are a great place to park your emergency funds or save for short-term goals. Why? Because they offer a combination of high returns and instant access to your money, making them a safe and efficient way to save. Another advantage is that, like regular savings accounts, high-yield savings accounts are insured by the Federal Deposit Insurance Corporation, or FDIC, up to the legal limit. This means that even if the bank or financial institution fails, your money is still protected. So, in a nutshell, a high-yield savings account is a powerful tool for growing your savings faster while maintaining easy access to your money. It's like having your cake and eating it too. Remember, in the world of finance, the more your money works for you, the less you have to work for your money. With a high-yield savings account, your money works harder for you. Opening a high-yield savings account is a straightforward process, similar to opening a regular savings account. First, you'll need to decide where you want to open your account. There are many options available, from traditional brick-and-mortar banks to online-only banks. Online banks often offer higher interest rates, as they have less overhead compared to physical banks. Once you've chosen your bank, it's time to gather all the necessary documents. These usually include proof of identity, such as a passport or driver's license, proof of address, such as a utility bill, and your social security number. Some banks may also require proof of income. Next, it's time to fill out the application. This can usually be done online, although some banks might require you to visit a branch in person. The application will ask for basic personal information, as well as details about your current financial situation. Be sure to fill out everything accurately to avoid any delays. After your application has been submitted, the bank will review it. This can take anywhere from a few hours to a few days. If your application is approved, the bank will then open your account and provide you with all the necessary details. You'll then need to deposit your initial savings into the account to start earning interest. Finally, once your account is open, it's important to manage it effectively. This means making regular deposits, keeping track of your balance, and reviewing your interest earnings. Most banks offer online and mobile banking services, making it easy to manage your account wherever you are. As you can see, opening a high-yield savings account is a simple process. However, keep in mind that not all high-yield savings accounts are created equal. Some banks offer better rates than others, and some may have additional features that can benefit you. That's why it's crucial to do your research before deciding on a bank. Compare different banks, look at the interest rates they offer, and read reviews from other customers. This will help you find the best high-yield savings account for your needs. Remember, it's important to research and choose a bank that offers the best rates and terms for a high-yield savings account. While a high-yield savings account offers many benefits, it's essential to be aware of the potential risks and considerations. Now let's delve into some of these potential risks and considerations. One of the key variables to consider is rate changes. High-yield savings accounts often have variable interest rates. This means that the rate can change over time based on factors like market conditions and the bank's discretion. While it's possible that the rate could increase, there's also a chance it could decrease. If it does, your potential earnings from the account could be less than expected. Another consideration is withdrawal limits. With most high-yield savings accounts, there are limits on the number of withdrawals or transfers you can make each month. This is due to a regulation known as Regulation D, which sets a limit of 6 transactions per month for certain types of transfers and withdrawals. If you exceed this limit, you may face fees or even have your account closed. The third main consideration is minimum balance requirements. Some banks require a minimum balance to open a high-yield savings account, and others may require you to maintain a certain balance to earn the advertised interest rate. If your balance falls below this required amount, you may earn a lower interest rate or incur a fee. Lastly, always remember that while high-yield savings accounts can offer higher interest rates than traditional savings accounts, they may not always be the best option for everyone. For instance, if you need regular access to your funds, or if you're not comfortable with the possibility of rate changes, a different type of account may be more suitable. In conclusion, while high-yield savings accounts can offer substantial benefits in terms of higher interest rates and potential earnings, they also come with certain risks and considerations. Rate changes, withdrawal limits, and minimum balance requirements are all factors that you should consider before opening an account. Being informed about these risks will help you make a more informed decision about opening a high-yield savings account. Today, we've explored the concept of high-yield savings accounts, their benefits, how to open one, and the risks involved. We've taken a journey from understanding the basics of savings accounts, laying the groundwork for us to delve into the world of high-yield savings accounts. We've learned about their attractive interest rates and how they can be a powerful tool for growing your wealth. We've also walked through the process of opening such an account, highlighting the simplicity and ease of this task. However, we've also acknowledged the potential risks and considerations, underscoring the importance of making informed decisions. In essence, high-yield savings accounts offer a balance between risk and reward and can be a valuable addition to your financial toolkit. It's all about understanding your financial goals and making choices that align with them. Thank you for tuning in to InvestorWeb. Don't forget to subscribe for more financial insights. Until next time, stay smart with your investments.